Did you know that analysts believe the price of Tesla stock will eventually rise to $10,000? Experts think that Tesla's stock price might potentially hit $10,000 in the near future. However, the age-old debate over whether the EV company's stock is overvalued or cheap has not yet been resolved. To find out more, keep watching and listening. As previously indicated, opinions on Tesla's worth are constantly disputed by supporters and detractors. Some project an unachievably high valuation for the business, while others offer incredibly low estimates. Naturally, the so-called premier electric vehicle manufacturer is meeting the needs of Tesla fans while falling short of detractors. Watch today's video to learn why analysts think Tesla stock will eventually reach a $10,000 price tag. Since its June 29, 2010 launch, Tesla stock has increased by an astounding 24,389.7, reaching a high of $1,170. 70 cents and 12 cents recently. According to an Investor's Business daily examination of data from Saplat, Global Market Intelligence, and Market Smith, Tesla surpassed every single large stock now in the top 500 plus every single one on the mid-size 406, 600 small caps on a percentage basis. Nvidia has gained 11,424% throughout that period, making it the only C500 company even somewhat comparable. 10 years ago, if you had invested $10,000 with founder Elon Musk, your investment would now be worth $2.01 million. This equates to an average annual return of more than 70 during that period. The same $10,000 invested in the SEP 500 increased by just $274 to $37,376. That's only a compound annual growth rate of 14. It's nearly impossible to comprehend the extent of Tesla's surge. Tesla's market value increased by $1 trillion to reach $1.18 trillion to reach $1.18 trillion over the previous 10 years or so. It has surpassed Facebook to become the fifth most valued firm in the SEP 500. As of right now, Tesla is the most valuable car company in the world, valued at almost 5 times that of Toyota. Tesla has shown to be a profitable venture lately. Since its founding in 2003 to 2020, Tesla has had annual net income losses. According to analysts, 2018 is the year that Tesla goes even deeper into the red on an adjusted basis. The company is projected to earn 8.94 cents per share in 2022, up roughly 300% from 2020. Analysts predict Tesla will profit 7.18 per share or $8.7 billion even after deducting all costs. Zoran Redlich, known as a Super Bull in the Tesla community, attended Rice University, Stanford University, and Albany Law School before retiring in 2019 from 26 years of practice as a criminal defense and personal injury attorney. Warren started creating videos about Tesla, SpaceX, and other relevant subjects. Redlich added his 2 cents while other analysts and investors discussed why AI Tesla had been winning the EV market. He clarified that one reason Tesla is so far ahead of other firms producing electric cars is that they have nearly finished developing fully autonomous driving apps technology for mass market distribution. After that, he presented the battery revenue model to show how much Tesla's shares might be worth in the future. The aforementioned estimate states that the revenue generated by a $30,000 car less the 50,000 watt-hour battery pack and $600 per kilowatt hour equals 600 million gigawatt hours at 1 terawatt hour, with a price to sale ratio of 5 and a revenue of 600 billion. Tesla is aiming for 6 terawatt hours by 2030, which translates to over $3 trillion in revenue and a $15 trillion market cap. Based on the present price and excluding any potential share price splits, it may be calculated that the share price of Tesla stock is approaching or surpassing $10,000 per share. Others, however, brought up issues like what would happen if Ford, GM, and VW all started making electric cars. Warren just wrote them out as real competition because to their significant FS gap with Tesla. Besides the battery revenue model, Redlich presented the model called the Robo Taxi model. When asked how Tesla can move to an unreal valuation, he said that these two models prove exactly how Tesla will flourish in the near future, and that the seeming high valuations are actually realistic. Talking about his Robo Taxi model, he said that during the Autonomy Day presentation, Tesla CEO Elon Musk said in a side note, "We're going to have a Tesla-owned Robo Taxi fleet of 1 million vehicles." He also said that each Robo Taxi I'll make $30,000 in profit a year. That is $30,000 in profit for individuals who own the vehicle and run it as a Robo Taxi, not the Tesla-owned Robo Taxi fleet. According to Redlick, assuming these numbers, there will be 10 million vehicles making $30,000 in profit a year. Redlick emphasized that. For him, these are both understatements of where it's going. Do you think Tesla can actually be worth $10,000 per share? In the future, share your thoughts in the comment section below again. Assuming these numbers, a company that is growing so quickly, excluding all revenue from Tesla, all profits from Tesla Energy, and all profits from selling cars, would have a price earnings ratio of 30. Moving forward to the year 2030, for example, the company is supposedly making 20 million vehicles annually. So a price earnings ratio of 30 translates into a $9 trillion market cap and a $9,000 share price. This is a far cry from a company that makes 10 million vehicles at a profit of $30,000 per year, which is $300 in profit annually. This understates the robo-taxi model and leaves out the battery revenue modeling, just as it leaves out Tesla Energy and Dojo as a service. How much would you pay today for a stock that will be worth $9,000 in a few years? It would be $2,000 to $4,000 per stock. Currently, it is trading at about $700 a share. Billionaire investor Ron Barron went all out on his massive position in Tesla in a 2020 CNBC interview, going full bull. Redlick further noted that there is 10 times more potential for revenue in Tesla. I already informed you that I believed we would make 20 times as much money with Tesla. I continued saying that. After explaining that so far, we have made 4 times. I now believe we're going to make twice or 3 times as much over the next 5 years. Ron American, mutual fund manager and investor Stephen Barron, often known as Ron Barron, founded Barron Capital, an asset management company that focuses on generating growth solutions for equity investment. Ron has 52 years of research experience with buy and hold investors, having formed Barron Capital in 1982. Their yearly turnover of the $10 billion flagship fund Barron Growth is only 3%. If someone were to ask if Tesla will be worth $10,000 per share, Ron Barron is undoubtedly banking on it. Given this prediction, one is bound to ask, where will Tesla be in the Hamptons? Barron also owns one of the largest estates in the Hamptons, which he assembled from 2001 to 2009 at a total cost of $152 million. It's worth much more now. 10 years, Tesla is focusing on improving its autopilot and fully autonomous driving of its features in order to attract the best AI talent. The company hosted an AI Day event in August 2021. Notably, attracting the best talent is key for Tesla to lead on the FSD front. A number of automakers and technology companies are working to make autonomous driving a reality, and most have the financial resources to achieve that goal. Technological know-how could very well separate the winner in this contest. Tesla has established itself as a disruptor, and it may continue living up to that edge in the years to come. Additionally, Tesla is adding more drivers to its FSD beta testing group, which should facilitate the FSD functionality's distribution. Finally, Tesla is focusing on auto insurance as a growth opportunity. It is clear that the company plans to approach this differently from traditional insurance companies. The company is focusing on these areas as well. Energy storage and solar deployments are other potential growth areas for Tesla. The company has been progressing well in both segments. Second, continuous improvement in vehicle software and battery packs are required for Tesla to maintain its edge in EVS and FSD. It will be interesting to see how Tesla does in this situation. Visit our channel and view our other videos. Tesla intends to use its extensive driver data for things like braking, turning dangerous, following forward collision alerts, and so on to anticipate the chance of an accident and give unique premium rates based on that. If you thought this one was enjoyable,